it's 365 Hawaii. Julie Ziemelis with Keller Williams, Big Island, and we are kind of basically doing kind of like a mortgage minute right now with Travis Green. He's one of the branch managers for V.I.P Mortgage, and we're going to give you guys kind of a snapshot, I guess, of what's happening in the market right now in terms of mortgages. And he is our finance guy. So tell us a little bit about what's happening right now.
Yeah. So the story of 2022 was high inflation. Kind of a lot of pessimism about the economy. Feels like people are waiting for a recession to materialize. And so with that, mortgage interest rates went to 20-year highs, right? And they increased at the fastest clip in 40 years, right? So kind of doom and gloomy for 2022 on the rate front. It's uncomfortable, every day having to requote rates higher for people who are pre-approved and looking for homes. So I'm happy to say that, as we're recording this right now in mid-January 2023, we are actually sitting at about the best that rates have been, the lowest that 30-year fixed rate mortgages have been in about the last 4 months.
Okay.
So it's really nice to say that. The reason for that is the inflation gauges that the Federal Reserve pay close attention to have been building on and reinforcing each other that inflation has slowed dramatically and may have peaked. We don't know that it's peaked. The optimists in the industry say we've turned a corner, that inflation peaked sometime in the summer, maybe rates peaked sometime in the fall. Don't know if we actually have turned that corner, but the data does suggest that, the data shows that it has slowed down and in some cases has reversed a little bit in some areas. So that has translated to rates improving.
There you go. Because if you're feeling pain, it might be the good time that the Fed's thinking that their work has been working.
Yeah, and so it has, right? It has worked.
Yeah,
and
because
so
people are starting to say, hey, I'm not buying a house tomorrow. I'm waiting for a little bit to see what's going on.
Yep.
And so demand's pulling back, so it shows that we're not on this on-fire experience that we've been for the last year and a half.
Exactly, and energy prices have moderated, and kind of some supply chain issues that were affecting goods and services parts of the economy have kind of started to sort out and loosen up a little bit. And so that was kind of just a big Rubik's Cube that's starting to get solved. And so some things are starting to fall into place to allow for inflation to come down to a more reasonable level and to a level, importantly, that the Fed wants to see for them to, kind of slow down the rate hikes or maybe even climb down, although that's remains to be seen when that happens.
Okay. He's not going to tell you, but that's what I've been hearing. But he said, don't say that. So.
There are a lot of people who do think that we will see rates continue to decrease through the year. I'm always hesitant to make predictions or prognostications. What we were saying before the video is that the conventional wisdom in the industry was humbled many, many times in 2022 on their predictions of what was about to happen. And we never know. We don't have a crystal ball.
Right. The crystal ball could be very cloudy because the world has been so volatile lately.
Yes. Yeah, we are living in interesting times.
Yes.
Right. Yes. So that's something to keep in mind. So it's all the more reason to make sure that you are working with a loan officer that stays on top of this kind of news and is happy and able to communicate with you frequently what you need to know.
Right. And how frequently do you think that, how often do you communicate with people that you're dealing with? Let's say they're not in escrow right now, but do you send out like a monthly newsletter? Are you talking to people? Are they calling you? What's the story?
Yeah, so that's a great question. So I do have I have a weekly newsletter that goes out. I actually have a couple different weekly newsletters, kind of depending on their appetite for how much, how nerdy they want to be. Yeah. And then I just really make myself available for them to reach out to me. Sometimes, when you're on the phone with your lender, it's not really, the questions fall out of your head, right? So what I tell people is you're going to think of things later, and I want you to feel welcome to always reach out to me and ask those questions, because it's important that you understand what's happening with your loan and how kind of a moving interest rate environment affects your pre-qualification or pre-approval.
There you go. So question for you. I haven't asked him this question yet, though. If somebody is on the edge of being able to get the house they really want, and then all of a sudden the rate does something where all of a sudden they can't afford it, is that a good time to say, hey, the rates just went down, can I actually get into this house? Is this level of loan I really was hoping to get into?
Yeah, absolutely. Yeah, so that's a great question. But sometimes rates will improve. Sometimes somebody will just pay something off, or the balance of their student loans, they'll get notice that it's being forgiven or waived or whatever. And so their kind of picture from a qualifying standpoint will shift, right? So even if rates stay flat, and don't change, sometimes their situation changes.
Yeah.
And so whenever you have those changes, or if you hear on the news that rates are improving, or you're starting to see price drops in your neighborhood, and it's kind of putting it more within reach of where you last kind of saw it with when you were talking with your loan officer, definitely always reach out and see like, hey, does this impact me? Does this change my situation? What, does this, can I qualify for more, or does this make it more affordable or more comfortable for me?
Yeah, that's great, because we actually had a friend of ours who was hoping to get into a certain level, and all of a sudden one thing changed, and all of a sudden that whole, like, the $1 million market opened up for them.
Yes.
And so it completely changed their future. So, okay, so that's good. So reach out if you're hearing the news. And then also with the rates and everything, long term though, it's you could always use programs to get into now, and then maybe refinance in 3 or 4 years when the rates change, right?
Yeah. So
It's like buy the house, date the rate.
that's kind of a common refrain right now in the mortgage business, is like marry the house and date the rate. And so that is kind of the school of thought that, like, if you're able to qualify now, and it's, again, makes sense for you and your family and your financial situation to buy now, even at the current rates, go ahead and do that, with the hope that interest rates are going to improve at some point in the near to medium future, and then refinance at that point and take advantage of those, right? So that's kind of what a lot of people expect to happen.
Right.
May or may not happen.
Okay, here we go again. We're like thinking that's speculation almost, right?
Yeah,
Because we don't know
totally.
what the Fed's going to do, right?
Right. Rates might stay at this level for
Years?
who knows, years.
Okay. You hear to
Possible. It's possible.
Okay. So if people want to get a hold of you to learn more about different kinds of mortgage programs and being able to talk to you and kind of run through different scenarios in terms of finances and stuff, what's the best way to reach you?
Best way is to call me. So that's area code 808-333-6790.
Okay. And we'll also dump some more information below on the comments below. And thank you, Travis. This guy really
Thank you.
smart. He'll help you with whatever you need to make sure that you guys can qualify.
Thanks,
Thank you.
Julie.
Okay.